So you want to know if you can actually afford a penthouse in Dubai. Not the fantasy version where you see a drone shot of a rooftop pool overlooking the Burj Khalifa and picture yourself sipping coffee up there every morning. The real version, the one where a purchase price is genuinely just the entry ticket, and a second, ongoing set of costs decides whether that penthouse turns into a smart investment or a slow-draining money pit. Subscribe before we start, because by the end of this you'll know exactly what owning a Dubai penthouse costs, from the purchase price, to the service charges, to the rental income it can realistically generate. And you'll understand why the hardest part of this purchase isn't paying for the property, it's budgeting correctly for everything that comes after you've already signed. Let's start with the number most people fixate on, the purchase price itself. Dubai's residential market has climbed sharply over the past several years, and the average price per square foot across the city now sits somewhere around 1,650 AED. But that citywide average hides enormous variation, since prime landmark districts, like downtown Dubai, trade closer to 3,000 AED per square foot. Penthouses, by definition, sit at the very top of that range, and true trophy units push the number far higher still, with full-floor apartments in the Burj Khalifa itself listed anywhere from 80 million to over 120 million AED, somewhere between $22 and $33 million, for units spanning 10 to 15,000 square feet, with 360-degree views of the Gulf. A more accessible, though still genuinely high-end, Burj Khalifa penthouse has recently been listed around 18 million AED, which puts it firmly in multi-million-dollar territory even before you've furnished a single room, and that's before factoring in the premium buyers routinely pay for corner units, higher floors, and unobstructed skyline views. Now let's talk about what that purchase price actually buys, because in Dubai, unlike a lot of global property markets, the headline number is genuinely just the beginning. On top of the sale price, buyers pay a Dubai Land Department transfer fee, typically around 4% of the purchase price, along with agency commissions, mortgage registration fees if financing is involved, and various administrative charges that together commonly add several percentage points on top of whatever number is on the listing. And here's the part almost nobody budgets for correctly going in: the service charge, an annual, mandatory, per square foot fee that funds building security, elevator maintenance, landscaping, insurance, and a required sinking fund for major repairs. Across the city, published 2026 figures show service charges ranging from roughly 6 AED per square foot in more affordable communities up to 68 AED per square foot at the Burj Khalifa itself. And for a full-floor penthouse spanning 10,000 square feet or more, that alone can mean an annual bill exceeding 500,000 AED, close to $136,000, before a single other ownership cost is considered. Here's where it gets structurally different from most property markets people are used to, because Dubai charges zero personal income tax, zero capital gains tax, and zero annual property tax, which genuinely changes the math compared to owning real estate in most of the world. That absence of tax drag is a huge part of why Dubai property has become such a magnet for international buyers, since rental income earned on a penthouse flows to the owner untaxed, and any appreciation realized on resale isn't clipped by a capital gains bill the way it would be in most Western markets. But that favorable tax picture doesn't erase the service charge burden, and industry breakdowns consistently show that in a typical building, service charges alone can consume somewhere between 15 and 25% of gross rental income, meaning an owner renting out the unit needs to account for that bite before ever calculating real, spendable profit. So what does the income side actually look like, and does it justify the ownership costs? Dubai's rental yields are genuinely strong by global standards, with typical gross yields across popular investment communities running somewhere between 6 and 9% annually, and select emerging areas posting yields above 8.5%. For a top-tier penthouse specifically, yields tend to run somewhat lower than that citywide average, since ultra-luxury units are priced more on prestige and capital appreciation potential than on maximizing rental return. But even a conservative 4 to 5% net yield on a multi-million-dollar penthouse translates into genuinely substantial annual income once service charges, maintenance, and any financing costs are subtracted. Owners who bought a decade ago, when average citywide prices per square foot sat around 870 AED versus today's roughly 1650, have also seen the kind of capital appreciation that makes the ongoing carrying costs look small. In hindsight, though, that historical run-up is exactly the kind of pattern that tends to slow once a market has already climbed as far as Dubai's has over the past 6 years. Now for the stuff nobody warns you about before you start browsing penthouse listings. First, the AED 2 million property investment threshold that unlocks Dubai's 10-year golden visa sounds like a low bar next to a genuine penthouse price tag, but it's worth knowing precisely because it shows how far below true penthouse territory the residency visa conversation actually sits, meaning the visa incentive that gets discussed so often online is really built around mid-market apartments, not the trophy units most people picture when they hear Dubai Penthouse. Second, service charges are not fixed for the life of ownership. They're reviewed and published annually through Dubai's regulated MALAC system, and buildings with elaborate amenities, observation decks, art installations, and hotel-style concierge services, the kind of features that come standard in genuine penthouse buildings, tend to sit at the very top of the published fee range and can climb further as buildings age and require bigger maintenance reserves. Third, unpaid service charges aren't a minor administrative issue. The system escalates through late fees, legal notices, and ultimately a registration block that can prevent an owner from selling or refinancing the property at all. So this isn't a cost that can simply be deferred if cash flow gets tight in a given year. Fourth, while Dubai real estate has appreciated strongly over the past several years, that trajectory isn't guaranteed to continue at the same pace, and any analysis built purely on extrapolating recent growth forward is speculation dressed up as a forecast, so treat every appreciation figure in this video as historical context, not a promise about the future. So who's actually winning at this? Overwhelmingly, it's buyers who treat the penthouse as part of a diversified portfolio rather than a single concentrated bet, often international investors and high-net-worth individuals who are drawn as much by the zero-tax income and capital gains treatment as by the property itself, and who have the liquidity to comfortably absorb service charges and periodic vacancy without financial strain. These buyers frequently already hold other real estate or business interests in the region, meaning the penthouse purchase reinforces an existing relationship with the market, rather than representing their entire financial exposure to it. The buyers who struggle are typically those who calculated affordability based on the purchase price and the mortgage payment alone, only discovering after closing that a six-figure annual service charge, combined with the gap between advertised and achievable rental income, meaningfully changes the real return they're generating. Okay, so let's put the real numbers side by side. A buyer at the more accessible end of true penthouse territory, purchasing an 18 million AED unit in a landmark building, is looking at roughly 720,000 AED in transfer and closing costs alone. An annual service charge that could easily land in the low hundreds of thousands of AED, given the premium amenities that come with a building at that tier, and a realistic net rental yield, after service charges and management fees, somewhere in the 3 to 4% range if the owner chooses to lease it out. Now the other end of the spectrum, a buyer acquiring a full-floor Burj Khalifa penthouse in the 80 to 120 million AED range is looking at a service charge bill alone that can exceed 500,000 AED annually, a genuinely different order of ongoing commitment, but one that comes paired with a scarcity and prestige factor that has historically supported strong capital appreciation and made resale to another ultra-high net worth buyer realistic rather than theoretical. So yeah, can you actually afford a penthouse in Dubai? If the question is whether you can wire the purchase price, that's genuinely the easy part of this equation, compared to most exclusive assets, since Dubai's market is built to welcome international buyers, with comparatively few of the gatekeeping hurdles you'd find elsewhere. The real test is whether you've budgeted honestly for the service charges, the transfer costs, and the gap between advertised rental yields and what a unit actually nets after every recurring expense is subtracted. Because that's the layer of cost that quietly determines whether a penthouse becomes a genuinely smart, tax-efficient piece of a portfolio or an oversized line item that never quite pays for itself. The owners who make this work aren't the ones who simply had the purchase price ready. They're the ones who understood, before they ever signed, that a Dubai penthouse is a real estate business wrapped inside a lifestyle purchase, not a lifestyle purchase with a rental check attached as an afterthought. Subscribe, and we'll do this again next week with the next opportunity that costs more than the sticker price ever tells you.